Morning, morning, Keith at Crypto Bullseye, and I'm a happy bunny this morning, guys, and it's because of each and every single one of you, because you've told me in the comments one thing, that this is the channel that you want to learn and self-develop yourself. This is the start of your journey, guys, and unfortunately, out of 3.5 years of grind, every single day, I've only got 9,463 subscribers. Why do you think that is, or why do I think that is, guys? I haven't sold myself to exchanges, haven't sold myself to pre-launchers, haven't sold myself whatsoever, because self-development is what I'm trying to teach you guys, and I'm learning, and I want to show you what I'm learning along the way. So I want to teach you every single thing that I know as far as trading is concerned, and I want you to fire the questions back at me so we can do it collectively as a team. And where can you do that, guys? Of course, you could do it in the Discord group. It's completely free. Link in the description below. So get yourself in there. There's about over 300 people in there, and all we do is just chat crypto, chat life, and just bounce things off each other all day long. What an amazing family that we've got there growing. So, like I say, that's free. So, the self-developers, guys, the ones that want to self-develop, that is a small minority within the crypto space. If you were going to say 100% of retail, guys, self-developers are less than 5%. That's why the channel's small. But if you're here, guys, you're going to get an advantage, because you're going to understand one thing. When these influencers that are throwing out prices, that are giving out targets, that are saying the price is going to go here, the price is going to go here, when they disappear, when they do something different, where does that leave you? You need to do it yourself, guys, and just spend 10, 20, 15 minutes a day self-developing yourself. Write down what you're doing, and in 12 months' time, I promise you, you'll be a different person. So we're going to look at Injective. What we're going to do first, I'm going to show you a simple trick. Since we are learning, guys, I'll show you a simple trick. So you can see here, we're on the daily chart. This is Injective. It's trading at $10.39. How do we know if this is fair value? Now, what we're going to do is we're going to do a simple tip where we're going to change the bar chart into a line chart. So if we just do that now, up here on the top of Trading View, you could change it to a line chart. Why do you think that we do this? Because we're joining the dots. We're trying to find out the most area of support, the most area of resistance. Remember, structure is king. So I'm going to zoom out even further, guys, because the higher the time frame, the higher the conviction. So we're going to zoom out onto the weekly. That makes it a little bit easier to join the dots. So what we're going to do is we're going to join the dots together. You can see here, we've had 1, 2, 3 touches there. That's one. You've got one here. You've got 1 touch, 2 touch, nearly 3 touches, 4 touches, and we're coming back down. So there's another one. We can keep adding them. Look how easy this is, guys, when you've zoomed out on it the weekly. You've got 1, 2, 3, 4, 5. The more touches, the more chance of you having a touch at that level going forward, whether you're above there or whether you're below there. So it's either support or it's resistance. We're building it in very, very simply here, guys. Support and resistance. What about here? You've got this area here, 1, 2, 3. And then we go up to these areas here and these areas here, and of course, these previous highs. So that's step one. That's the identification process. We've built in our support, we've built in our resistance. Before we had a naked price chart. Now we understand what's likely to hit as a support base and what's likely to hit as a resistance base, but it creates a range for us now. This is the range that we've got here between $9.46 as support and $13.27 as resistance. Doesn't look much, guys. That 41%. So what we're going to do is we're going to zoom back out in at the daily, and then we're going to go back onto the candle chart, Kanashi, back onto the candle chart, and then we'll just zoom out. Now we had a naked price chart. Does that look any different to you guys? Look at how price is reacting at these levels. So that gives us an advantage. That straight away gives us an advantage. The next thing that we can do is add in our diagonal trend line. This is our momentum line down here. Let's get that up. This is our momentum line. So we're adding that, and we're waiting for one thing. We're waiting for a break to happen. Now the break's happened. What's the next thing? And what is this trade in reversal pattern that I wanted to show you? It's this. This is called the inverse head and shoulders. And this is a high probability move, because if you're following this down, you're in a downtrend, you're in a downtrend, you're in a downtrend. We're putting in lower highs, we're putting in lower lows, lower highs, we're putting in lower lows. So it's a clear downtrend. We need to respect that it's a downtrend until something happens, until we make a base, until we make some kind of a reversal pattern. So if I just zoom in here a little bit more, just to show you a bit more clearly. So this is an inverse head and shoulders. It's a high probability move. The reason it's a high probability move is because we're making a lower low here, come back up, lower high, trend is intact, come back down, lower low. Now this is where things change, and this is why it's a reversal pattern, because Once you come back up to test this previous lower high, that's signaling that the bulls have got strength to manage to push price right up to that high, which is what they've done here. And then you always get a pullback, guys, while the bulls regain momentum. And the key is putting in a higher low, guys. If the trend was intact, that'd go all the way back down there, and you'd put in a new lower low. This higher low signals something big. And once you get a breakout, expect a big move to the upside. So that's the inverse head and shoulders, guys. What about the opposite? What's this? Let's do exactly the same again. Made a big move to the upside. You've got your left shoulder, you've got your head, you've got your right shoulder, and then a big move to the downside. So you can see that's flipped in reverse, and that's a reversal pattern. So we've pulled back there. So what we need to do in the short term, guys, what we need to do in the short term is just going to be a simple diagonal trend line. We want this diagonal trend line, and that's going to allow us to understand exactly when the bulls have got momentum, and there's a key area that we actually need to break and close above, and it's not just this trend line. It's this line here, which is $13.25. Why is that, guys? Because we zoomed out, we went onto the weekly, we went into the bar chart, and that was a major area of resistance, and you would expect that to act as resistance going forward. See, we couldn't breach through it for a long period of time before. So you want the break, guys, and once you're above the $13.28 and you're holding the $13.28, that is a good trade because you're holding that level, and then you can get confirmation by one thing, bringing up the indicators. Now, price action's king, structure's king. We look at candlesticks, we can get a representation of how people feel at any given time by looking at the candlesticks. We can look at the psychology behind what's happening. Just an example, psychology here, bears have got control, bulls have got control, bulls have regained control, and then move to the upside. We understand that. We understand that. So if we add in the indicators, you've got the stochastic now, which is an overbought position on the daily. So this needs to come down now, which indicates that we're likely to come back and test this and double bottom here, guys. If we double bottom here, we've got enough momentum on the stochastic RSI to push back up, we've got a good opportunity to take out this previous lower high here. And that's the aim of the game in the short term, $11.61. So you got your $11.61, that shows momentum. Then you got your $13.28, that signals a shift. So how can you play it if it's a trade, guys? If it's a trade and you come back down to this level here, that's a good thing. Let's just tidy that up. That's a good thing because that reduces your risk. You know that this is the major support base. You know that this is the weekly major support base. This is going to hold. You think that it's going to hold unless we have some kind of a capitulation event. So because it was support, support, support here, it's going to be support, support. It's weekly support, so we expect it to act as support. So if it does come back down here, what does it do to your risk to reward? If it does something like this and then breaks, you get your risk to reward tool up, depending on how big the break is. You know that that is the low. If it's not the low, you're wrong. You want to be wrong with the least amount of capital at risk. So that's why we use a stop loss. That's why we put in the low. And that's why we wait for a break for confirmation to show that the bulls have got momentum for the first time out of this range, signaling that there's a high chance that we can go back and test the previous high. If you're testing the previous high, that gives you a 2.59 risk to reward. And this is just short-term trading, guys, 2.59 risk to reward. So the next resistance barrier is all the way up here at $16.66. You could do one of two things. You can either trade, look for the previous high, which is what I do from a conservative perspective, unless we're creating really, really strong higher highs and higher lows. We've got a real clear direction. When we're in a choppy phase, guys, I just want to trade to the previous high because there's a higher probability of that happening. 2.59 risk to reward, nearly 2.5 risk to reward. That's not bad, guys. How could you improve that? How can we improve that? Because ultimately, you don't know how big this break's going to be. Could be up here. So if this break goes all the way up here and you're waiting for the close, why do you wait for the candle close, guys? Shout out at the screen. Why do we wait for the candle close? Because this can happen. Because this can happen. You can get pushed out, and then by the candle close, you can get pushed back in. And that is a fake out, guys. And it happens time and time and time again. So you need to wait for the break. So if we got a volatile break, that would bring your risk to reward down to 1.4 to 1. Not good enough. So if you'd waited patiently, guys, and you built up some structure here, you were waiting for a retest from that previous resistance to act as support, which hasn't happened yet, to come back down as a support buy. What does that do to your risk to reward? brings it all the way down to 3.91. So can you see by just waiting, guys, whether it's a day, depending on what time frame you're on, whether it's a day, whether it's a couple of days, whether it's a week, you can bring down your risk and you can increase your reward because it is a probabilities game. We're not right all the time. We need to be right a certain amount of times, and we need to ensure we've got a good enough risk to reward. So if we're wrong, we live to fight another day. If we're right, then we're laughing, guys. But as long as you reduce your risk and increase your reward, that's the main thing. And unfortunately, the only way that you can do that is having patience and time. So what you can do, guys, is once you put another swing in, if it goes in your direction, remember RS flip, what was resistance in an uptrend becomes support. What you can actually do then, we talked about this on Brad's channel yesterday, bring up your stop loss, bring up your stop loss. So ultimately, when the trend does this, comes back down, you're out in profit. So the trend is your friend till the bend at the end. You remember that, guys. Don't get too complacent. Even I get too complacent sometimes, and the market teaches me a really strong lesson, but we learn from these lessons, and that's what it's about, guys. So that's Injector. In the short term, I'm not going to give long-term projections. However, get yourself in the Discord group. Let me know what you think about that. Let me know how you self-developed. Subscribe to my channel. Let's chat about it, guys. See you in the next one.